Hello, everyone, happy Thursday. And as you may know, Thursday tip, dollars make me holla. And today's subject is the dollar. Alrighty. So if you have been keeping your head on a swivel, kind of been updated on the markets, you understand that the dollar is on a multi-decade high right now. Oh, who cares, McGuire? I care. Why do I care? Because it's important. So right now I'm showing you a chart of the dollar since 1971 or whatever, yada yada yada. And I want you to be two key takeaways. Back in 2008, the dollar was at its lowest in the decade. Why is that? Well, we had a great financial crisis. Foreign investors saw the us as risk, so why would they plant their money in the dollar? Well, it's a good point. They're scared. But why are we seeing the dollar rise right now? One could be definitely interest rates playing an effect on that. When we go into a rising rate environment, it tends to increase the dollar's valuation. Also, we're seeing global recessions happen. So again, put this back into 2008, just flip flop it. You need a safe haven. You're a foreign investor, and you need a safe haven. So that's also going to increase the dollar. What else? Oh, well, maybe the fact that the Federal Reserve was doing a lot of quantitative easing. If you watch my last video, you'll understand how dollars are locked up in the banking system when they do this. So there's a shortage of dollars, thus, more demand for them. Also want to point out is how will it affect me as a U.S. consumer? Great question. It might actually be a double-edged sword, but I'll let you choose what you do with this information. So, from a consumer standpoint, it could be good for you. If you got a bunch of traveling and vacation ahead of you, today, now, in the coming months is the time to go. Because the dollar is high, we can practically buy $1. $1 equals 20 pesos. So you can go have at it in Mexico. That's a pro. What else is a pro? Oh, yes, a high dollar. It makes foreign goods even more cheaper. Fantastic. Wow. Yeah, wrong. It also hurts domestic companies because there's an advantage. Because as a consumer, we're going to go foreign to buy our goods because it's cheaper than buying them domestic. But how will that affect the global economy, even the US economy? Well, let's take a look at what Microsoft and Salesforce had to say about the high dollar and how it affected their bottom line. Well, you have it right here. Microsoft and Salesforce temper expectations for future revenue due to the second quarter revenue was hurt by 900 million due to a stronger US dollar. Why is that? Well, let's think about it from this standpoint. Say I'm Microsoft and I'm selling computers to Mexico, and the dollar is now tripled its value compared to the peso. And what will that affect? Well, it's going to cost me three times more pesos to buy a dollar to purchase their computers. So there's a disincentive. It's too expensive. I can maybe wait this out, wait for the dollar to lose its value, and then make it more cheaper. That's one way they're losing money. Um, and that's kind of the issue is that because of the dollar being so high, it could hurt our domestic companies. And when you think about it, the S&P 500 is composed of about 40% of those stocks do business overseas. So it's going to have a direct reflection of their bottom line. There's a lot that the dollar can do. And I always say it's a double-edged sword. Um, so understanding how the dollar plays into our economy is one, high dollar is actually deflationist because our domestic companies don't want to be spending as much because if you think about the foreign exchange, there's a disincentive. Not a lot of foreign companies are going to do business or they're going to lower the amount they buy because of high prices. But also, if the consumer stays strong in the U.S. and has a good amount of money in their savings accounts and still keeps up their consuming, we'll see inflation rise higher overseas because the dollar is worth more and we're buying more foreign goods cheaper and cheaper. So it's going to create inflation across these, but also it's going to slow down inflation in the United States. So that's one of the main reasons why the Fed is they knew this, they implemented it, and now we're seeing it in action. So it'll be interesting to see what comes out in the coming months regarding interest rates. See if the dollar, loosens up a little bit, but it is definitely at its highest it's been in 10 years. hopefully you got a little something out about this. It's kind of a hard and complex topic to talk about because we didn't even go into the foreign exchange rates. Now, Japan is buying back yen by using dollars because it's so cheap to do so just to keep its currency alive. So, on that note, hopefully you got a little bit. Would love to go into more detail, but just due to time and stuff like that. Anyways, have a wonderful weekend. It's almost Halloween. Go pick some pumpkins. I'm gonna be doing a carving thing, so I'll show you some new carvings I'm doing this week. But that being said, have a terrific, fantastic Thursday, and we'll see you next time.